Hi everybody, welcome to this week's Coffee Break Accounting with me, Becky Brooksbank. As always, if you haven't grabbed a cup of tea or coffee, press pause, go and grab your preferred choice and then come back and settle in for this week's jargon-free accountancy session to help you understand your business numbers better. So this week, for those that have been following before, we're continuing to look at series 1, which is all about the profit and loss account. This week, episode 6, is about net profits. So we are going to take the profit and loss account to the last number that you'll find out about, and net profits are the second most important number that you will need to understand in your profit and loss account. A few weeks back we had gross profit, and that was the first number I wanted to draw your attention to. Now we're going to look at net profits, and it's the second important number that I really want to draw your attention to. So hence it gets a bit of a slot on its own so that we can take time to pause and consider the importance of understanding your net profits. In the last episode, we looked at the overheads that your business would incur. So overheads were, if you remember, the costs that your business would incur if you were closed for the day. If for whatever reason you're doing business strategy day, or it's your business day off, whatever it might be, things that your business would still have to pay for. And we looked at John Tapp and what his overheads were. And then the takeaway task was for you to go away and have a look at your overheads, what they might be. Have a look at some of your cost lines, whether the descriptions are right, condense down if you want to, or expand out if you think there is some more cost overheads that you would like to have in. But like we also said, there is a commonality between many businesses in overheads. There are things that every business will have: telephone bills, marketing, advertising costs, subscriptions, those types of things. So many of the overheads are common to all businesses, okay? So you can always, if you're still unsure, have a Google, see if you can find some ideas online, because there's plenty of information on overheads out there, okay? So overheads are really important to understand because they're the missing link between our gross profit, so what our sales are costing us, and what actually running our business is costing us. So that's where we have to look at gross profit. So gross profit is defined as the income less cost of sales, less overheads, or gross profit less overheads. We'll ignore, for the sakes of this episode, because it could get a bit technical, things like interest and tax, okay? So for the sakes of what we're trying to learn, we'll take the net profit as being the figure that we find after deducting all our costs and our overheads. Okay. So let's have a look at John's profit and loss account that we have here. So we can see, as the weeks have gone on, he's been expanding, and I'll just make it a little bit bigger to here. He's been expanding through. We started looking at the sales, then we looked at direct costs. Last week we looked at the overheads, and we came back to the total overheads figure. The last little step that we're doing, like we're doing today, is talking about calculating the net profit. So we are going to do this, and as I've said, net profit is simply the gross profit that we've already calculated less the overheads. And I've got overheads as negative, so I can add it on. So John Tapp's net profit is £17,365 for the year that we're looking at. Not bad. Okay. So remember, again, if you've got a negative number here, you've got a loss. Okay. John Tapp has made a profit for the year, but if it's a negative number, you've got a loss, which means that your overheads here are greater than the revenue that you've received at the top. Okay. Now, as we found before, when we looked at gross margins, it is really important to also look at net profit as a percentage of revenue, okay, to calculate a margin, because it makes it comparable across the industries, and we'll come back to that again in a minute, okay? So in order to calculate the net profit margin, we do exactly the same thing that we did with the gross profit, and we take our net profits and we divide them by the revenue that we have had, okay? And turn it into a percentage, which really easily on Excel is like that. Okay, so here we can see that John Tapp has a net profit margin of £35,000. And I'm just going to write a little note here for you. So when you're looking back at this later, you can work out what the calculation was. Okay, so it's the net profit, this figure here, divided by that figure at the top. Okay, so John Tapp has made a net profit margin of 35%. So what does this actually tell him? Well, this means that for every pound in revenue that he has in at the top, he has 35 pence in his pocket as profit. Okay. Which then leads us to believe, actually, the higher the net profit margin, the more pence he receives in his pocket for doing the job. That's a really good thing to do, okay? Now, we saw earlier that when we were looking at gross margins, that everything is industry specific, okay? And often, if you're trying to find out how well you've done, the best thing to do is go and have a look at your industry. Now, generally with net profit, across the board, any business, if you've got a net profit of about 10%, then it's probably average. If you've got a net profit of 20%, then you're doing well. And if you've got a net profit further down at the other end of the spectrum of around 5%, then it's probably a low net profit, okay? John would fall quite comfortably into the high category. His net profits are over 20%, so he's got a great result for him, okay? I would advise him to look and see what the average industry is for a small sole trader plumber, if he can find that data, just so he fits into it. But if it was me, I would be pretty happy with the fact that I was having a net profit margin of 35% after all my taxes. Sorry, after all my overheads, not taxes. So John will be pretty happy with his margin that he's had here. But what would happen if you calculated this and you either came out with a loss or you ended up with a really small net profit margin? So something between 8% and below. Okay. Now, if your margins come out lower than you expected them to, you've got two potential problems. Two potential actions you could take. One, you could increase your revenues and your sales prices, or two, you could decrease your costs. Okay. And let's think about this a little bit more. And which one you choose will be very dependent on the level of business that you are. So for many businesses in the startup and growth phases of their business, it's likely they need to increase revenues in order to increase their net profit margin. And why? Well, actually, what a startup business and a business in growth phase are doing is they are building foundations and investing in the business and spending money and incurring costs for things that are going to help them in the future. Okay, so they're investing now for increased revenue turnover. So if we, for example, think about a shopkeeper who's opening up a shop, they will need to invest in rent, they will need to invest in heat and light, they will need to invest in staff to open the shop for as long as they want them to. And they will need to do that before actually they've managed to build up a customer base and a revenue stream. So that it's likely that their overheads to start with will be higher than the revenue that they're having in. Also think about a service-based business, not one shop delivering product, but a service-based business like an accountant, for example. So when I was starting out, I had to invest in software, I had to invest in marketing and advertising, web hosting, and all these other overheads in order to establish me as a business before necessarily I had the revenue to come in. Okay, but in essence, I was doing that with a plan to have the improved net profits in the future. So if you're a new startup business or you're looking to do a period of growth at whatever stage your business you're in, it's likely that your net profit margin will be squeezed. And that's fine as long as you understand why. And if you understand that your target is for increased revenue, great. Your revenue will come if you're doing that right. And you'll see over the next couple of months that your net profit margins will start to increase again. If you're a business and you've been in business a while, your turnover will likely to continue to be strong. You'll have built up a good client base, or your product sales, and found the levels of new product to obsolete products and all that type of thing. But your margins are starting to squeeze. Now, there's a few likely things to this, but the common thing is always that you will need to decrease your cost to increase your net margins, okay? It is likely that your supplier has been slowly increasing their costs of your product for a while, okay? And you need to figure out if there's a way that you can renegotiate that contract back down, because you can't pass any more cost on to your customers. Or, for example, you have got complacent, things have been a bit tough, you haven't had time, so you put another member of staff in, or you've never looked at your printing overheads, because that's just is what it is. Your gas and electric contract has been the same contract it's been for 8 years, because you've just carried on, don't want them to change, it's all a bit of a hassle. Similarly with your banking, you may have been with the same bank for a long time and the fees have started going up. Is there any incentive to change? So what you find in stable businesses that have been going a while is that it isn't necessarily their revenues that are causing their margins to squeeze, is actually the costs that they are incurring. So by doing an assessment of your costs and looking at where all your overheads coming from, your direct costs, seeing if there's anything that you can squeeze, any efficiencies that you can make, will all of a sudden help your net profit margin. By implementing those strategies over a period of time, your net profit margin will still continue to go up again. Okay. Now again, the course of action you take will depend on what you identify in your business. But imagine if you haven't run these numbers, how are you just going to know? How many months will pass? That gut feeling that something isn't quite right will just continue to bubble along, and you won't be able to put a handle on why you haven't quite got any money, or why you always feel that you're paying out and not getting in. Okay, so it's really important that you do have a look at running these numbers, okay, because they give you such an insight and they give you a chance to find out things. So that is all I've got to deliver to you on net profit. Such an important number to know, and actually relatively easy to calculate, particularly if you do it on a regular basis, okay? So net profit, remember, is defined as being income less direct costs, less overheads. So income less all your costs. We have only taken it as far and ignored taxation and interest, which is fine, and continue to think about it that way. That's not a problem. And if you do want to know more about where your business sits in your industry, do some research, convert your net profit from a number into a margin, so divide it by your net sales, and then go away and do some research in it and find out how you do. So this week's takeaway task is for you to go away and check your calculations of your net profits, and then to have a look and calculate your net profit margin if you're not already doing so, to see what that will tell you about your business. And have a look around, do some research, see if you can find your net profit margins for your industry, and also just for the UK as a whole. There's loads of reading out there, so I think you'll find it really interesting when you start digging around. So once again, thank you for joining me today for our weekly instalment of Coffee Break Accounting. We've taken the time to look at net profits. Next week is going to be our last week looking at the profit and loss, so the last episode in the profit and loss series, which will be summarising all our learning and just giving you a few helpful hints to go away and think about for your profit and loss account. So thank you again for joining me, Becky, for Coffee Break Accounting.